Or the Stephanie Yates.
Hear me?
Hey, Henry.
Yeah, can you hear me?
Yep.
Okay, good deal. Trying to connect. I can't hear you.
Hey, Henry, is your camera on?
Now remember, my docking station doesn't have that access.
Okay.
Yeah, the laptop won't be able to run this through the laptop screen. To be tiny for me to work on.
Okay. Should be fine.
Can we switch out maybe just my headshot picture onto this or anything or
Do you just want to connect it with your phone and then just add a video feed using another organizer access?
Um,
Because you are,
let me see. I
so
can
I'm
connect
kicking
my
one of your
phone.
logins out. You're logged in twice, so I'm gonna kick out the second one.
Okay, so you want me, okay, so if I log in from my phone, is it still gonna connect it here to talk, or is it gonna do everything from
Yeah.
my phone?
Yeah, so you're gonna connect it from your phone on the side and just
Okay.
mute it so that there's no reverb back.
Let me do that. It's not letting me join from the phone, so I cannot open page because the address is invalid.
Rosie, if you're on the line, can we please record this? Some of the agents want to have access to this later.
This webinar is being recorded.
Okay. Is that working? Is that working?
You have to be.
Okay.
Okay, so your phone needs to be muted, and you're still going to be on the desktop. Your desktop is going to be the audio.
Okay, I'm on the desktop. I got the phone muted. Can you hear me on the audio on the computer though? Can you hear me on here?
I can hear you on the computer,
Perfect.
and that's the extent of it. And then we have the video feed coming in from your phone, so that's fine.
Okay, good deal. She's going to share the presentation here on the main screen.
Rosie's there.
Okay.
Maybe I can do that for you. All right, so we'll wait for another couple of minutes before we can start it off, and then it's being recorded, so it's going to go into the video library as well. Henry, you can see the presentation on one of the windows, right?
Yeah, I see it on my computer.
So let's get started. Henry Mendez, thank you so much for joining us today. Henry, you're the lead broker on the Rate Shop .us platform. You're principal in 3 states, and then you're also dealing with a lot of transactions coming in from the US for our US division. So I wanted to bring you on board so we can help the Canadian teams understand what's required, how we can actually benefit from our partners in the US, and that's going to help us drive some business in the US as well. And then they also want to lick off the really juicy commission options and available just based on the compensation that is offered in the US, because we're pretty much limited down to 75 to 80 to 100 basis points, and then there's volume that taps off. So thanks for being here. If you want to just introduce yourself a little bit so the teams know where you stand and what your exposure is to the industry.
Yeah, absolutely. Thank you for having me. My name is Henry Mendez. As Alan said, I run the U.S. division here. Currently, our office is running business out of 3 states: Florida, Georgia, and Texas. I've been in the mortgage industry now for about 20 years. I've got a wealth of experience not only on the origination side, but a very strong background on the underwriting side. Spent more than 10 years as a senior mortgage underwriter, and have underwrote a variety of loans that are done in the U.S., whether it's our conventional products, government loans, FHA, VA, USDA loans, our non-traditional mortgage products, our bank statement loans, debt service ratio loans. So I've had a lot of experience that could be useful to help clients that are interested in investing in the U.S. market, whether it's in these 3 states or additional states that we have. Now, the opportunity here can be great. You know, what the opportunity will be is something we're going to discuss today. Why should your clients be interested in investing in real estate here in the United States? What are the benefits of it? Help your clients create a long-term investment plan. There's a lot of ways that we can assist you in doing that on this side of the business. Help you guide you step by step on the investment process, along with all of our products that will be available for your clients. There's a great amount of potential for compensation and additional earnings for you, Canadian market, to be able to make additional income out of the U.S. market here.
So Henry, if I can just pause for the benefit of everyone. So the contents that we have here basically outline the presentation that we're doing for the purpose of Canadians looking to invest in the U.S. markets. However, just for everyone's benefit, we do have our traditional citizen programs in the U.S. where we have access to 0 down and 1% down and 2% down programs as well, where if you're fully qualified, then you can actually go into the FHA loans as an option as well. But Henry, I'll let you speak more to that. So specifically, what are we targeting today?
Today, we're going to be targeting Canadian investment purchases only. So these are clients that are Canadian citizens. They're not U.S. citizens. They're considered foreign nationals. They're not have the ability to access the more traditional products. So that's why what we're gonna be covering today.
Simply put, a down payment of, let's say, 35% can let you purchase a vacation rental and an investment rental opportunity in the states that we're going to outline today.
Correct. Absolutely. These are great opportunities. Again, it allows your Canadian clients to be able to own real estate here, whether it's they want it for personal use or a combination of have a vacation home and at the same time have an investment property that can generate residual income every single month for them.
So I know when we were setting up shop in the U.S., you and I talked about how this helps just kind of create a flow of business from Canada into the U.S. because it's a much bigger market. I know those specifics as to why Rate Shop is a competitive advantage. Why don't you tell us in your words, what is the competitive advantage with Rate Shop mortgages?
The main access is the number of clients you have access to here in the United States, as well as the number of properties in different market areas that you will have access to by doing business here in the United States. Obviously, the market has gotten a lot better here over the next few months, and I think it's going to continue to improve as we finish out this year and go into the 2025 year. So I think it's an excellent time to start reaching out to potential clients that maybe have been interested in this market, but possibly have held back because of the higher rates we had, particularly in the last 18 to 24 months. So the opportunity, I think, is perfect right now to bring in these clients.
And how many lenders is Rate Shop US working with in the US?
We have access to over 100 lenders that we can use. The great thing about the product that we're going to be discussing today is it's available in the majority of the lower 48 states. So we're not only not limited just to the specific 3 states that I mentioned in the beginning. Those 3 states will be more tailored for not only those products, but more of the traditional products that Ali mentioned earlier, the FHA, the low down payment options, conventional mortgages. So those 3 states will tailor specifically to those. If you have a client, for example, that has dual citizenship, that has the ability to live here or in Canada, we have options for that as well.
And if you can isolate specifically what support level, I know when we're working with Canadian clients, because we've done a few of those transactions so far, we've been able to kind of roll down a process so that we're taking care of the client at our end for the Canadian transaction, where we create a down payment source, and then we use part of that funds to be able to put into a Florida or Georgia or wherever, those 30 states that we have access to. So what support system do they receive because of this relationship that we have from Canada and US? How is it any better compared to someone just starting from scratch and finding a solution out in the US as a competitor to us?
I think the first and foremost, and probably the biggest piece is, we're partners. You're working with a partner, somebody that's going to be looking out for your best interest at all times. It's in our interest to make sure your clients are taken care of just as well as you take care of them if they were buying a property in the Canadian market. We have a full staff in place in a process of how we handle the loan from acquisition to closing and support thereafter. There's full-time processors that are available to answer any questions for your clients at any time, as well as myself and other loan officers that work for our offices here in the United States. Additional to that is full support and underwriting. We have each lender, with every lender we do business with, we have a full access to their full underwriting team, managers. Additional to that, I have additional support from account executives that are assigned to my office for each particular lender. So as far as support, there is no shortage of it. You will always have, your clients will always be taken care of from beginning to end.
So what kind of a market appeal does the US offer to Canadians? Like, why should the clients look at an opportunity to invest in the US?
Diversifying your portfolio is always a great thing. Having access to real estate is always a great way to invest your money. If you have liquid funds available and are looking for passive income, I don't think real estate is one of the most lucrative areas to do that in. It's secure, for one, and depending on the markets that you're looking for, whether you're looking for a vacation home in South Florida or a cabin home in the mountains, you have the ability to offer an array of options to your clients. There's a very diverse market here in the United States to offer those things. There is countless miles of coastlines, as anybody will know, whether it's on the Pacific coast, on the East Coast, along the Gulf. You can offer your clients a variety of products. Someone that may want to be maybe in the northern states, towards New York, New Jersey, Massachusetts, any of those areas, and still have those summer months, but may want a winter home. It's there.
we've seen an year-to-year increase in rental incomes, and we thought that it would change during COVID, and we thought it would change post-COVID, and then looking at it right now, we're still seeing an increase compared to last year, because now that the number of flights that we have, which are fully functional post-COVID, the amount of travel that's happening, like when we are comparing apples, actually seeing an increase in rents across the board in the US. So is that predominantly because of the inflation cost increase, or do you actually see the values of the property also increasing over time?
Both. The property market, a lot of clients thought that, after COVID, we saw that huge increase in market value that we've never seen in the history of the mortgage industry in the United States. And what drove that was the shift in how people work. Prior to COVID, a lot of people would go into an office, work your 9 to 5, go home kind of thing. That changed completely during COVID, and that drove the market price up. The reason for that is a lot of clients that lived, let's say in your northern states, a lot of states that were shut down for a very, very long time. Clients were able to work from home, and companies saw that this was a model that worked. It was a test that was able to be put in place without really thinking about it. It showed that employees not only are more productive, but obviously it's substantially less cost for businesses to operate. You're not providing an office, lights.
So I know we were talking about how in the Canadian system, you're lucky to be able to qualify for maybe 4 or 5 or even 6 properties, even though the banking system they call is very strong. Behind the scenes, what happens is there's only so much amount of a risk exposure that lenders and banks will allow for. So you're limited to maybe 4 is on a good day with the same lender, and then maybe up to 8 properties if you actually huddle with a number of lenders, so maybe 3 or 4 lenders will combined end up doing about 8 properties. How many doors can you actually do with financing options out in the US?
There's not a limit on how many properties
you can have like 20, 30, 40, 100 doors if it really comes down to it, and we have access and we have those relationships to be able to fund those transactions. So for people who are transitioning from the Canadian market, where they're fed up of the tenancy board problems, or they're fed up with the inconsistencies in the market, then that's where you would actually look at the US as an opportunity. And specifically in the areas that we're operating, where we have we're operating in 30 states with the DCSR program. However, we do have specialized programs available in Georgia, Texas, and Florida, specific to vacation rental opportunities or Airbnb opportunities. All of that is something that we can count towards a number of door that we can accumulate as an asset class wealth.
Yeah, there's no limit on that front. And going back to the rental market, the rental market's extremely strong right now. Most of the properties that got sold in the last 2 to 3 years, almost 40% of the transactions in the United States were investors. That should tell you how strong the market is. Most of the homes you would have thought were being bought by primary homeowners and things like that, and they weren't. Most homes were purchased by investors, and a lot still are. Over 30% of the loans that are getting done are investment purchases because the market rent is so strong. If you're buying in the right areas.
Sorry, I'm cutting you off. There's an overlap. One of the things that we've talked about with our teams is how we can seamlessly transition the customer to allow their transaction to help them with the down payment source here, and then the use of that fund so that you can actually have the down payment. So I know you guys have a very particular requirement where you need to see where the down payment is coming from, and you need to see a history, and you need to validate that part of it. And when we are doing a refinance, that process and the trust ledger coming in from our lawyers as a closing part is something that you guys use. to everyone's benefit, our ability to be able to successfully close or arrange for supplementary funds, down payment, or for any other reason as an equity takeout for your Canadian transaction or Canadian mortgage. We will also guide you to how specifically you need to move that money over in a certain way into a title company's account or into your own personal accounts based out of the US. We have a team that allows you to take a step-by-step instruction and kind of walks you through that entire process and gets your funds into the US accounts. We have relationships where financial institutions can call you, set up an account for you. Everything is possible online. If you're looking for ITINs or if you're looking for LLCs, then we have a relationship with our contacts through RateShop US that allows those customers to be able to enact on that as well. So it is a streamlined process. At the point in time when the application gets passed on to Henry's team will pick up, process the file, get the approval, sign off on it, and what we call as instructions. They have their title company taking care of end to end along with their processing team. So that entire process is actually taken care of by entirely RateShop. No third party is touching this. And that's one of the comforts of knowing that, yes, this transaction is actually in safe hands. Henry, let's talk about the benefits of real estate investments specific to the states that you feel are high volume producers or where you've seen a lot of transactions happening. Why are people attracted to that?
It's going on here. Like I said or covered earlier, being an ability to diversify your portfolio and generating additional streams of revenue for your clients. There's a lot of areas right now that are excellent to purchase. I think in Florida, particularly, anything in the coastline, doesn't matter whether it's on the Atlantic side or the Gulf side, you can't go wrong. There are so many vacation spots all along the coastline that do excellent as Airbnb rentals. You have places out in the middle of the states. Obviously, sure, most everybody's familiar with Orlando. It's one of the biggest tourist attractions in the entire state. You could never go wrong with buying a home there or a condo, a townhome. You would have absolutely no issue maintaining that property rented out the majority of the year and generating a stream of income every single month. Additional to that, equity. Properties continue to appreciate at an average of 2 to 3% every single year in markets like Florida. So in addition to that, you have that stream of income in, as well as someone taking care of paying that mortgage for you every single month. And most important, lastly, it's a great place to vacation. If you want to take your family on a 2-week vacation, why stay at a hotel? Stay in your own place, your own location, save additional funds there, and be able to enjoy those areas in the state. Additional other areas that are great are the Carolinas, North and South Carolina. A lot of people don't know this, but there's some fantastic golfing communities there. It's a hot spot for people that enjoy that sport, or the beaches as well. Like I also said, if you have clients that may want to look for something out in the mountains, Tennessee is phenomenal for that. Pigeon Forge is one of the biggest attractions for people that are looking to get away for a few weeks out of the year and going to the mountains, enjoy a cabin with their family. They have an array of properties there. They have.
I know we were talking about when we were setting up shop. We talked about where to settle on the state licensing as well as the corporation, and we talked about Florida. Seeing is believing. So I want you to talk about just the tax benefit associated to those $0 or 0% states. What's the real benefit behind not having to worry about capital gains or not having to worry about an additional cost that you would end up paying towards the sale of that property when the time comes?
Yeah, capital gains is a huge one. Particularly in states like Florida, Texas, where you don't have state income tax, like some of your northern states, like New York, Jersey, and things like that. that is a massive savings, and that's another reason why a lot of people are attracted to the southern states. It's tax benefits. It's a huge savings annually to the clients, and also to your investment, not having to pay additional taxes every year on those. Uh, Additional to that, at your filing, you will see tax benefits. All these states offer tax write-offs for the taxes get paid annually on the property. In addition to that, all the interest is paid on the loan from the payments. So these are great ways to also offset income that your clients will be making these investments.
The last client that we had, just defining the specific stereotype demographic, they were baby boomers. They were exiting Toronto. They're fed up with the market hype in Toronto, and they're moving to Florida, and they're basically wanting to live there 6 months here, 6 months there, kind of a snowbird situation. I know reverse mortgages are available through us as well. The question that I had was, if you have that kind of a person who's just trying to move out, what is the level of retirement planning they have to do ahead of time to be able to enter that market? Or is it just a matter of, listen, get that 35% accumulated, and then you're going to be able to find a place? How easy is that, or how do you navigate that part?
For clients that are in that situation, they're more looking for retirement, want to stay here majority of the year or half of the year and commute. The reverse mortgage is a great option. The main thing obviously requires is equity. It's going to require a lot of equity because the lender is going to be based the money they draw out to you every single month based on how much equity the property has. There's some calculations that'll get done into that, and based on what you have, instead of you paying a mortgage payment or your client paying a mortgage payment, excuse me, the lender will issue them a check every single month. They will still live at the property. Obviously, there's some age restrictions to states and different lenders, but mostly these are obviously for clients that are elderly, that are more towards their later year. The clients that can access these programs at the end will receive, as again I said, income every month instead of paying a mortgage payment. Obviously, at the end, someone passes, the lender will retain the property as an investment to sell.
So we have a list of 30 states in total that we're comfortable with in lending. Some really awesome programs that we have for DCSR, debt service coverage ratio programs. As long as the rental income kind of makes sense and you have that down payment, it's as simple as that. But speaking on Florida, Georgia, Texas, we talked about that. We discussed the potential that it holds. And I know you were talking about Orlando. Like, there isn't a single month or a single time during the year that Orlando is not busy. Universal isn't busy. Disney isn't busy. Or even going out, Kissimmee, you've got Davenport. Like, every area that you go to is inundated with Airbnb rentals, and it just keeps growing because Lennar has certain communities that are targeting that audience, and they've created those communities that are okay to do short-term rentals as well. Do we have any contacts that can assist with the real estate selection process as well?
Yes, 100%. I have great relationships with a lot of very experienced realtors throughout the state of Florida. I grew up in Florida in the Northeast area, so I've there for about 30 years. So I got a lot of cultivated relationships that can cover the entire state. And knowing, having an experienced realtor, it's a huge benefit to making the right decision and buying in the right area, especially for these types of investments. You don't want to go into an area where the market rent is low, the amount of people that are traveling to the area is low, and that's where someone with experience is key, to be able to provide that data, that information to help.
I mean, it's not just that, like the experience has a count to it as well. Like, for example, like if you get stuck with a unit that you're buying which has a ridiculous HOA fees, and the cash flow doesn't suit the property, and the realtor is just trying to make a sale out of it, you want that exposure to you so you can figure out whether that's the right property for you or not. How does that impact the Canadians' legality to be able to purchase? Is it a different process than what typically U.S. citizens are used to?
No, if you're buying as a DSCR, a debt service ratio loan, it's the same. You have some slight restrictions on how much you can finance. If you're a U.S. citizen or a permanent resident in the United States, you get a little bit more leeway on your down payment. Some products for a U.S. citizen can be as low as 15%. Most of the foreign national are going to cap out at max 80%. Most of the majority you're going to see so about 75. So there's still some good options to come in with lower down payments than having to worry about 30 or 35%, getting 70 or 65% financing to you. So that's a very important piece, going back to the fees and costs that property may have involved. One location versus another can make a big difference on your net revenue every single month. So that's something to always take into consideration. And again, make sure you have a realtor who understands that and understands what you're trying to accomplish short and long term with that investment.
So speaking on just the investment angle, because a lot of clients choose to, and we're speaking based on experience because we know that a few customers were interested in either exiting Canada entirely, or for that matter, they had an employment or they just wanted to use it as a rental opportunity. So what should they consider as an investment strategy? Is it worth just buying and holding so that the value starts going up at a certain point, or will it continue to go up? Or is it something that you need to plan ahead of time, whether the exit is going to help them or give them as much money as they originally invested? So if they're putting in, let's say, $130, $150 down payment, are they going to see that money back? Are they going to see that money grow in any way, shape, or form?
You are. We said on the equity portion alone, just outside of the rental income and revenue that you can generate monthly, you're going to see about a 2 or 3% appreciation annually on the equity of the property. Now, in addition to that, obviously, you're going to build equity by paying down the mortgage, or the person and people you rent out to every single month. Paying that monthly expense for you is going to generate additional income there. I always recommend, if you're going to go into an investment, particularly in the debt service ratio, try to look at it as about a 3-year investment before you want to make a major move, whether it's sell the property or maybe restructure the loan to something different. If you maybe change where you would like to live and decided, hey, maybe I want to make the U.S. permanent home. But I always recommend about 3 years where you're going to start maximizing your dollar. If you take something short and one out in 12 to 18 months, you're just not going to see that revenue. And the reason for that is obviously there are closing expenses involved with any transaction. And to see a full return of those in as little as 12 months is very doable in the rent side. But if you want to see not only the rent cover that and generate a profit, I always recommend 3 years.
So just a small note, when we're working with Airbnb type properties, we do have a team that works with the real estate agency that we would refer out to, and also have short-term rental management companies that we are connected with that can help achieve that as a goal. We've seen profit margins of, like, there was an Airbnb calculation that we were looking at, HOA, all taxes included, the monthly cost was about $2,900. After Airbnb expenses, they were doing close to about $4,500. So you're looking at about $1,500 in positive cash flow per month. That's kind of paying down your mortgage, and above and beyond, it's giving you additional positive cash flow per month. And that's something, like, keep in mind, the $1,500 that you're putting out as an additional cash flow what it translates to as of right now, the loonie is actually lower as we speak. So you're hitting about 1.4% as a conversion. So that $1,500 can equate to almost like $2,100 in CAD. Okay. Planning for sustainable growth. How can they enter into the market and then become an avid investor or a consistent investor?
I always say the best way to come in is look at all the best options as far as the least amount of money out of pocket to get into the investment and the ability to maximize the market that you're buying. If you have cash flow and you do it properly, maybe instead of just picking up one property, you can pick up two to get started with. As you're generating cash flow, if it's not needed to take care of monthly expenses that you may have, it's always great to accumulate that and look at how to acquire the next property. Additional to that, with these debt service investment loans, there is the ability to extract equity and take out a second mortgage on a particular property once you're there, to have the ability to invest it into a third one. So if you're wanting to grow wealth, monthly revenues, additional streamlines of income, that would be the best plan of action. Is look
So
at
Canadian brokers choke up when they hear that as a strategy. So we're talking about like the Smith maneuver. We're talking about the Burr. So to do an ETO and then throw that money into the next transaction, we choke up because we have such a ridiculous few number of options that we can utilize. And it comes at a very heavy cost as well. And I know the mortgages are 15 years, 30 years in the US. So how much of a penalty can you end up dealing with, or do you not even need to worry about that refi at that point in time, or you just do a second mortgage? How easy is that process? How comfortable are the lenders with that strategy?
Extremely simple and easy. In addition to that, some of our debt service ratio products go as far as 40 years on amortizing. You could also amortize it as an interest only option. If this is an investment and you're trying to generate the maximum amount of dollars you can every month in revenue, why sign up for a full principal and interest payment for 30 years? Do a 40-year interest only option, 10 years interest only for the first 10. If you have a plan of, hey, I'm going to hold on to this property for anywhere from 3, 5, 7, or up to 10 years, go with the least amount of money to retain and maintain that property and maximize your dollars. Maximize that net income every month. The equity is still going to continue to grow on the property, but it minimizes what you're putting out every single month.
This is still a very low doc file, isn't it?
There is no document. There's no income. There's no credit. There's none of that. For foreign nationals, they're not going to have credit here established in the U.S., so you don't need credit. The only thing you're needing is, do I have the cash to cover my down payment and closing costs? And number two, does the mortgage payment I'm getting, does the monthly rent that the property is going to generate cover that to at least 75%? You don't need to even cover 100% of the mortgage payment. As little as 75% will get it done. There's a few investors that even go lower than that. Obviously, with those, there's a higher risk to the investor, so you trade one thing for another. Less rental income to get the loan, but obviously you're going to pay a little bit more in interest. So that's a fine line you kind of want to really look at to make sure it's making sense. But kind of the sweet spot is about 75% to 100% of the rent. As long as you're in that median or better, you're going to be in an excellent position to maximize that investment every single time.
I'm going to summarize the marketing angle of how Canadian brokers, or even our partners, because this presentation is going to go out to our referral partners. There are a lot of real estate agents that come to me in our current ecosystem, like people from Brampton, Mississauga, Orangeville. I have a guy working out of Markham right now on a transaction with a client that's actually exiting out of his property as a listing. And they came to know about the fact that Rate Shop is also operating in the US. And I wanted to make a point to have these resources available. And we've created a marketing package so that anyone, whether it's our brokers, whether it's our referral partners, whether it's our realtors, we can all use the marketing that we have available for the purpose of helping them understand what it is that we help with. So first off, we take care of the Canadian transaction, we take care of the US transaction end to end seamlessly. Number two, we're actually the same company, like literally the same company, because of which we know our revenues are protected. We have compliance requirements that are obligated and they're confirmed and they're taken care of. And we also manage the client expectations because we have a streamlined process in place. So the day you pick up the client on the Canadian side and the day the deal closes on the US side, that entire process is something that the client has actually been able to walk through with someone holding their hand. We also have a network of tax professionals and lawyers and title insurance companies that kind of vet the entire transaction ahead of time. The real estate agents that we're working with are also obligated in a certain way. So we don't have the drama where, like in Canada, we can issue a waiver for the transaction without even having an approval in place. So when we put in the transaction, it's either cash or it's mortgage. And when we do a cash, then at that point in time, you can consider the option of going ahead full throttle, and you don't have to worry about the financing condition. But in the US, the financing condition is built in, and you have to take that time. And then Henry, his team would prepare what we call a quote. That quote is sent out to you. Once you say okay to it, then we click the go button on it, and then we have a firm approval on that. And then there's no back and forth. Then it's just full throttle all the way up until the closing. The support system that we're also working on right now, it's one angle to it. We are FINTRAC approved, so we also have access to be able to work with money transferring agencies. So as a money sending business or money servicing business, we can connect you with the right people that can get you a good rate as opposed to an RBC or a TD transaction rate, and you will get a little more bang for your buck when you're transferring funds out to the US as well. We don't touch the money. We're a mortgage broker. We're not allowed to touch the money, but our contacts that are registered as MSBs are the ones that are going to perform it, but we will tell you how to get that done, because what we want to see is certain things for the purpose of that down payment that we need to prove to the lenders as well. And then we're going to keep giving you tools and resources in the form of WhatsApp marketing as well. So if you want to share it, do so. It will create a buzz. It's one more product in your arsenal. It's one more option that you can monetize on, and that the beauty of this transaction that we can complete in the US is there's a far greater attraction of these kind of properties especially in Florida, but like you said, South Carolina, North Carolina, they're beach touching states, and there's a lot of potential in those areas too, and they're cheaper. So what you would consider a property going for, let's say, a rental here, a detached home, maybe 3-bed, 4-bed, would probably go for about 700 grand. You could find yourself a mansion for that pricing in the US, and it pays as much. The rental income is literally equitable to the amount of investment that you're putting in. So those are the areas where we can help. When we are talking about how our contacts operate, Henry, how comfortable are our clients, the ones that have processed the transaction so far, or for that matter, for future clients, what is the extent of our collaboration effort that we can ensure that, yes, you're going to be taken care of? Whether it's the management company, whether it's the real estate team, whether it's the title insurance company, whether it's the processors, how does that work?
In our end here, like I said, these are all relations that have been cultivated for several years. Have a full staff processing that work with the client hand in hand to assist them through the entire loan process. So once I've got the application in, got them the initial approval, we're contracted, I've collected some of the initial documents that are needed to get in, the file gets turned over to my processing staff. They from there will give it another review. If there's anything in addition that is needed, they request those documents at that time. From there, the loan gets registered and submitted to a particular lender we're going to be working that loan with. Once that is done, your initial set of disclosures go out to the customer, get those signed, so the loan goes into the lender's underwriting team will fully underwrite the file and give us that condition approval. That's always what we're looking for. That conditional approval is going to give us a list of items, the check boxes we need to get done to get the loan to close. And things that are always needed in that approval are things like an appraisal, title, getting homeowners insurance for the property. There's additional income that needs to be verified or assets that need to be verified. All those things will be in that conditional approval, and our processing team will reach out to the proper parties to collect those documents. Things like the appraisal, they handle all that. The title, they handle all that. The customer is only going to be involved in things that have to come from their end alone. Everything else, we take it off their hands and take care of for you. Once that's all done, title company schedules closing. Obviously, with customers that are going to be out of the country, there's remote closing opportunities to close electronically or with a notary that gets sent out to them to sign all these documents and then submit it back to the title company. Title company is going to go through the package, make sure everything got signed, dated correctly, hand it back over to the lender. The lender funds the loan, and we're done. There, you get the keys to your home, and we move forward.
Cool. So just to outline, we do a client consult. So whether you started off, you work with the underwriting team. Once the lead is confirmed, it gets pushed out in the form of an application onto our US platform, the rateshop.us. You can also refer your client directly to that platform, and they can start it off. As long as you share the name of that client with the underwriting team, they'll register it. Internal communication will go out to Henry, so they know that this is a lead that's expected through you, through the Rate Shop CA channel. If they need assistance with the property search, any additional assistance just to kind of find the right property specific to their needs, we can manage that part. Step 3, we do a pre-approval. What Henry was talking about is essentially based on a certain property. So if you've put in a purchase sale agreement in place, that's what we call a live deal. Once we have that live deal, we can go back to the lender and we can recommend a conditional approval. Conditional approvals are always better, but we still do pre-approvals as well, and we can give you an estimation and a quote on what the maximum amount is going to look like. The offer negotiation and internal communication allows us to be able to kind of look through at least 3 dozen different rates that we have access to, match the program according to the specific kind of individual, kind of property, kind of location. Florida, as an example, has a lot of hurricane zones, so some lenders may not be okay with it. Some lenders are comfortable with it. So because of that, we have to match it up, and we'll get you the best deal every single time. The closing process and legal considerations, very simple. It's not like in Canada. Everything else is taken care of by a third-party company, which is our title insurance. We recommend that. However, we don't impose that. So if you want to go find another title insurance company, by all means, but we know these people, we trust these people on a regular basis. So that's why they're recommended. We also, once everything is set in stone, we also recommend a property management company if you want to look at it, and they're going to help you with determining the rental income generation process and how to track the incomes and how to create a profitable solution. Sometimes there's a need to upgrade the home. Sometimes there's new furniture that's required. Sometimes there's additional things that you have to add to that home just to kind of beef it up a little bit. And we have a team for that. Ongoing support that we're referring to is we'll do a checkup every year. It's an automated email that goes out just to ask them, hey, Mr. Customer, is everything okay? I know you're coming up to your first anniversary. If you want to talk, discuss anything like that, then we'll have a chat about it. And the best part of it is if we end up converting one more transaction, you're actually going to get paid out on the next transaction as well, because that's your original lead. Henry, very quickly, just to kind of run through program 1, 2, 3, 4, investment lending options through our lenders in the US. What are they?
If you're just a foreign national, the only product that you're able to invest in is that service ratio product. This is the only type of property you're able to own. It's got to be an investment. Now, again, if you have the ability to have citizenship, then the door is wide open at that point. You know, you're able to buy a primary, a second home, investment. All the products at that point become available to you, including the multitude of down payment assistance programs we have access to. Each state has specific, counties have specific ones, their lender specific ones. So there's not a shortage of options. In times that it almost can seem overwhelming the amount of options you can have to own a piece of real estate here in the United States, which in my opinion is a great thing. It's never a bad thing to have options to choose from because everybody's situation is different. And I think that's where those options come in very handy. Client's need versus another are not going to be the same. So these products are good for that. Obviously, the lenders we have access to is also a strong suit for that. So we're never going to have a shortage of saying, hey, we can't help this client. I've never had to turn a client away over a product or options available to them. If we actually can do something for them, it's just based on the client's qualification.
It's a short-term rental, so anywhere between 1 day to 2 weeks to 4 weeks, there's a separate lender for that. Then we have long-term, which are like 9 months or 12 months or minimum 6 to 9 months or 12-month leases. There's a lender for that. Mixed-use property, which ends up being multiple doors within the same property, or for that matter, you've got a retailer, an office location at the bottom. You've got an apartment up top. Those are very popular in downtown Orlando. That's an option. Portfolio, so if you've got, let's say, 5 or 10 doors, which means you could have 3 or 4 properties, which with at least 2 to 3 apartments each. That's what we call a portfolio. That portfolio expansion is also an option, refinancing, equity takeout, and all of that. And there are specialized lenders that target each one of these segments. So the options are several. It's just a matter of identifying the one for the client. So starting off with the application, again, just like we do with the CA, the US is exactly the same.
And touching on the number of units, mixed use, we have lenders that lend to up to 25 units. So if you got a client that has enough funds and found a small apartment complex they want to turn into a rental unit, we have options for that. So there's not a shortage. We have options for commercial. You got a client that wants to invest commercially in the United States, we got options for that as well. If you got a client that has access, dual citizenship, has the funds and wants to build a hotel, we got options for that. So there's not a shortage of products that we're going to have. So best thing I always say is have a conversation with me or Ali with your as far as what you have on hand with your clients there, and let us tell you, hey, this is what we have for that. Don't ever turn a client away and say, nah, I don't think I have anything for you that can help you. Believe me, I've seen that a lot of time. You're missing out on opportunities. Put every client in front of us that is interested, and we will see what we can find to fit their needs.
So, very important topic, commissions. What's in it for them?
Yeah, the big ticket item. With our products here in the United States, we have the opportunity to make up to 225 basis points. Now, with some lenders on the debt service ratio, that number can actually be increased up to 275 basis points. Once the loan is closed, is funded, funds will get wired to our office here in the United States. And from here, we would wire funds to our Canadian partners, and they will pay you directly. So your money is always secure and comes quickly. Once the funds are in, immediately within 24 hours, a wire could be issued out to the Canadian office to make sure you get paid on your transaction.
So we do have a payout that goes up to 80% in commission payouts. The way it works is we're receiving the funds as a commission, even if it's outside Canada. So we do have to declare it as income coming into our accounts as well, and then we further kind of push it out into your T4As as well. But just generally speaking, we have partners that are also eligible for payouts up to 50%. If you have a certain volume commitment that you're going to be marketing in a certain way, and you have, let's say, a couple of deals that are happening consistently month after month, then there is an additional provision that we can create along those lines as well. But that's just one more avenue for revenue. The idea is to be able to offer additional products, and a lot of people are attracted to the U.S. market. So that's one of the reasons why you're going to see the benefit of a bigger commission. So I'll give you an example. One of our transactions where the mortgage amount was $320,000, it generated about $8,000 in commission, and the agent ended up getting about $6,000 paid in commission. And this is US. And that was for, like I said, $320,000 worth of a mortgage amount. And it was cookie cutter. It took about 14 days for the approval and all the way to title close. The deal in itself closed about 45 days in, but our wrap-up time was about 15 to 18 days. And that's how quickly you were able to complete that as a commission. So it is attractive. It is one more avenue. It is something that's on the go. I want to say, like, I keep doing the research and I haven't found anyone. I know there are a couple of contacts that are working in collaboration with another broker based out of the US, but to my understanding and to my knowledge as of today, there isn't a single brokerage that is US and Canadian licensed. So the only thing that's pretty much left for us is Mexico, which we're coming after in a bit, but in the meantime, we're North American so far. So it is a beautiful opportunity to make some money on the side just by attracting that specific niche audience. Okay, Henry, what do we need to leave the client with at the beginning of that consult? Just from a broker's perspective, they're new, they don't have the specific information on the programs. What do they need to share with their customers at this point?
At the beginning, I think it'd be good to maybe the first few, just to kind of get your bearings on how to lead that conversation and start. Get us involved. You know, we have no problem setting up a call. Give us a time when you want to have that client on the phone, and we'll be happy to get in there with you, have that conversation, answer questions right there on the spot that you may not have the answers to, that instead of having to come back to them. You know, I always say is try to make that sale and close on that first phone call. You know, you want to keep that interest high and giving the information to the client right then and there when you need it, instead of having to take a bunch of questions down and getting back to them. Additional to that is giving us the opportunity to maybe offer our advice and our opinion based on what their needs are, what we could suggest that maybe they didn't think of, that might be a better opportunity than what they might have thought they wanted to do. So I think that first phone call is everything. Just like they say, first impression is everything. You want to show a strong front, let the client know that they have our full support, not only there, but also here where they're looking to invest.
So just a side note, because we constantly deal with problems related to rental opportunities in Canada, whether it be the offset sitting at 50% for institutions, or whether it be home trust nickeling and diming, whether they're going to accept that rental income even though it shows up as fair market rent. We don't have those problems in the US. And if it's just about the initiative that we're talking about, the effort is the same, whether you're doing workshops or seminars, or whether you're doing knowledge-based Q&A sessions. Expose yourself to this information, expose your clients to this new knowledge, and you're going to find there's a huge audience waiting to convert. I want to share this. In my circle, there's at least a dozen people that have reached out to me over the last year asking me to talk about how they can invest in a property which is going to be in the US, possibly in the entertainment district, and allowing them to be able to capitalize on that, because their kids want to be at Universal, their kids want to be at Disney. So they're only going in for a couple of weeks, but what do they do with the rest of it? Because just the hotel accommodation, proximity, all those things have a huge factor on how they're going to plan their vacation. So whether it's Miami, whether it's Orlando, whether it's Fort Myers, we have people on the ground that can actually find the property. And when we start showing these people the opportunities, so whether you're doing this on the basis of realtor.com, just capture a couple of properties, take a couple of those pictures and put them on your social media so that they can also understand that this is the opportunity that they can benefit from. And then when you talk about a cash flow analysis where the monthly payment is going to be $2,500, your actual rental income is going to be $3,500, and you're seeing $1,000 in additional cash flow coming through after all expenses paid, make it apparent to them that this is a good opportunity. And that's where you're going to start finding clients that are interested in those investments as well. So position yourself, like Henry said, so whether it's a phone call or for that matter, if you're holding an event, for example, you want to push out an event at the end of September or October, and if you have like a few people or at least 10, 15 people that are joining that event, get us on board. If I'm not available, that's perfectly fine. I'm not the subject matter expert anyway. Get Henry on board, let him be a part of that conversation, and he's going to take it down, and he's going to help you convert a number of those people as well. Okay, Henry, I think we're going to wrap it up. I just want to, I think this was the last slide.
Yep. Yeah, these are, this is the product itself. If you can go back to that previous one, I want to touch on this. This is what I was saying. You can say up to 85 loan to value. You get it probably as little as 15% down. There's no employment or income that's listed. Loan amounts are up to 3.5 million. You could also, like I said, take out equity out of the property, cash out to $1 million.
So if we can just verbalize that for a second. So we know there are certain towns that are going for about 300K that do have short-term possibilities. So you're saying 15% is about 45 grand. 45 grand in US ends up being about 73. Closing costs added on about 85 grand. 85 grand can create a rental income worth about $24,000 to $30,000 in cash surplus.
That's what I say. That's why I was going back to the timeline I recommended on holding these investments. I look at the maximum benefit is try to plan for a 3-year hold on these rental properties for your customers. That's kind of the sweet spot. Anything from there is just icing on the cake. But that 3-year mark is going to get you everything you've invested in plus some. On top of that, if you decide, hey, I want to sell this property and move on into something else, trying to sell it sooner than that, yes, you're going to still have your equity. You're not going to lose your down payment. Your equity is still there that you brought in. So that's going to be money you're going to see come back. But, you know, obviously the goal is to make a profit and make a good enough profit on that particular investment. And that's where that 3-year mark comes into play. As you can see there, one of the bullet points, 80% is the max for foreign national. So again, if you have dual citizenship here in the US, you can get that additional 5% in financing. Obviously, the credit scores are just going to be pertaining to clients that do have established credit here in the US. If you don't, there is no need for a credit report. So that takes that out of the equation. But again, as you can see, there's no listing. Even if you are here in the United States, you don't need to list any job, employment, and it doesn't matter what expenses you have on credit if you have established credit in the United States. You can have other properties, other expenses. None of that matters. The lenders are looking at one thing and one thing only: the investment you're looking to purchase and what kind of cash flow rental market that brings in versus the mortgage payment. That's it. There is no debt to income ratio requirements. So again, none of that matters. It's a very, very simple loan. They're very quick turnaround. So these are not heavy documented loans or anything like that. It's, do you have the money? Does it cover the rent? That's it. If those two things check out, you got a loan. You got a house.
So you can close in an LLC. You can close in a personal name. You can, so he was talking about credit. So just a very quick note, even though you don't have credit in the US, you're still going to qualify. We're still going to be able to crunch that up. Beyond that, we also have a product that allows you to be able to build credit in the US simultaneously. And then we also have a lineage of the company that we operate, which is also to do with credit repair. And just so you guys know, that doesn't mean you're only going to be looking for clients in Canada. If you have someone you know in the US, we have the ability to kind of just directly deal with them, and then you still receive a comp on that transaction as well. Okay, beautiful. So Very quickly, just to kind of skim through Alabama, Alaska, Arizona, Arkansas, California, Colorado, Connecticut, DC, Delaware, Florida, Georgia, Hawaii, Idaho, Illinois, Indiana, Iowa, Kansas, and Kentucky and Louisiana. Oh crap, it's keep it's a
There's
lot.
more. This list is actually
Michigan, Minnesota, Mississippi, Missouri, Montana, Nebraska, Nevada, New Hampshire, and New Jersey, and New Mexico. Hopefully
yeah.
that's-
This list is it's going to be expanding here very soon. There's some conversations I'm having with some new lenders that are in the talks of talking to expanding this list to up to 40 plus states. So almost every single state can be covered under this product. I mean, there's certain states that investing is just not something you want to do, like, you know, Utah and Idaho. Those are not vacation destinations. So states like that are not attractive for that. You know, South Dakota or something like that. Mostly you're going to want to look at, you know, coastline. Coastline is where it's at. When people are thinking vacation, they're either thinking I'm going to the beach or I'm going into the mountains, you know, going skiing or something like that. You know, Colorado's a beautiful state. Got the opportunity to visit earlier this year with my son. Took him out there skiing for his birthday. It's absolutely gorgeous. The city, the towns, there's plenty to do. So again, there's an array of options for your clients, whether they want beach, mountain, snow, or something in the city. We have the ability to help them and guide them on which state could best provide what they're looking for.
Very simple submission process. First off, send them to rateshop.us/apply. It goes directly into our system application, and it's a streamlined process. They're on. The system's going to kind of navigate them from step by step to the next steps. Number two, very important, register your deal with extension 500. Let them know, hey, my client XYZ for this amount, or whether you have it decided or not, if they're just in their initial stages, at least their first and last name, register that information with your underwriting team, and then assign the contact. So we use Henry's name on every single application, period. He's a lead broker on that. He has the licenses for all the states. So that's the number one reason why at any point in time you want to refer someone, you use Henry's name. Henry Mendez is going to give you a call. So typically what happens is the system books an appointment into Henry's calendar, and then Henry or his assistant or one of the processing guys is going to schedule a specific time with Henry, and then Henry's going to call that customer, and then that's when the conversation starts. So if they want to call our main line for the US, that's mentioned. If they want to reach out, it's help@rateshop.us. We all have access to that email, so if you want to drop a line, do so. I would ask you guys to talk about this as an option with your referral partners as well. We've always thought about referral partners as, hey, I can help you achieve something, and then predominantly that is a mortgage transaction that you're trying to complete on their behalf. If we were to think outside the box, and if we talk to them like human beings as opposed to just referral partners, where we would be vetted in their future, where we are creating an opportunity for them to make more money, where we are focused on their growth and how we can achieve more for them, you're going to notice there's a complete contrast in how that communication could evolve in multiple opportunities. So the more you digress on, I'm just here for the transaction, you're going to keep it closed circuit. The more you talk to them about more and more opportunities, that's where people realize, oh, there's an ability to make additional money here, which is what you guys should be discussing with your referral partners, and it will help you in the long term. Any last words, Henry?
Just to close out, you know, a lot of the stuff that I heard I talk about, all the red tape you have to go through to acquire real estate. If you have clients that are trying to build a portfolio, why go through all that headache? Make it simple, make it easy. Let us help them here in the United States. You have a much, much bigger market in the United States that you can access and make that additional revenue and maximize their investment. So at the end of the day, it's all about the client. If you help your clients out and focus on their needs, the rest will take care of itself.
Cool. Thanks so much for joining in, everyone. Henry, I will see you on the other side. I appreciate you being part of this. Ciao.
Thank you.